Hello, do you think you know everything there is to know about disability insurance? Well, by the end of this video, I will provide you with the necessary information so you can make an informed decision. Because if something had happened to you last night and you couldn't work anymore, what's the game plan? My name is John Moakler, and I'm the founder of Moakler Wealth Management. And for the best advice on how to protect you and your family, subscribe to my channel and hit the bell notification so you'll be notified when we launch a new video. Now, chances are if you own a home or a car, you probably have insurance on both of those assets. And you might even think those are your most important assets. Well, I would say that you would be wrong. The most important asset is your ability each and every day to get up and go to work in order to produce an income. And so here's the question I usually ask people. If something had happened to you last night and you could no longer work, what's the game plan? And so the solution to this issue is something called disability insurance. And it would kick in and provide you with a monthly benefit tax-free for the rest of your working life. Now, some people watching this video might have a group disability plan at work. And you probably even haven't read your benefits manual or know the features of your plan. I know I didn't when I worked in corporate Canada, but every group disability plan in Canada has a huge flaw with it. And later in this video, I'll go through what that flaw is, and more importantly, I'll tell you how we put a solution in place to get around that. Now, disability insurance premiums should always be paid for with personal dollars, because if you have a group disability plan and they've given you flex dollars to spend to purchase your group benefits, make sure you don't earmark any of the flex dollars to your disability premiums. You should earmark them to your dental premiums. Because if you use any of your flex dollars to pay for your disability and you go on claim, then all of that income will be taxable income. But instead, if you earmark your flex dollars over to your dental benefits and you pay for your group disability with your own personal dollars and you go on claim, all of the money you receive is tax-free for the rest of your working life. And if you're a business owner watching this video, make sure as well that you're paying for your disability insurance with your own personal dollars and not your corporate dollars. Otherwise, you'll get into the same issue of taxable benefit versus tax-free benefit. Leave a comment in the section below and subscribe to my channel and let me know what type of disability insurance you have, whether it's a group plan or whether it's an individual plan and the type of features that you have. Also take a look at some of the other links in the description down below because I've put together a number of videos that talk about how to protect you and your family should life throw you a curveball. Now, when you're designing disability, you should have some must-have key features. And one of the first key feature that you should have in your disability is something called own occupation. Because if you don't have this feature in your plan, then after 2 years of being on disability benefit, the insurance company can force you to do any other job that you're capable of doing. And the income that you receive from that job would be subtracted off from the benefit that the insurance company owes to you. This is the flaw in all group disability plans. Because in a group disability plan in Canada, after 2 years, it moves from own occ to any occupation. And so here's the solution to get around that issue. So if you're in a group disability plan, what we can do is we can put in an individual plan. It's a very cheap and cheerful solution. And the reason why is because we wouldn't turn on the benefit for at least 2 years. And so how this would work is if you went on disability, your group disability plan would kick in for the first 2 years and pay you. But then when the definitions changed from own occ to any occupation, then we would have the individual plan kick into place, and then you would be covered for the rest of your working life. Now, the second feature that we should look at is something called FIO, or future income option. And what this feature allows you to do is increase your monthly benefit based on your pay going up each year. And so if you have this feature, you can apply to increase your benefit, and there's no medical requirements needed in order to get that benefit increased. Now, if you decide not to increase FIO on the anniversary date, it'll just roll over to the next anniversary date, and you can take a look at it then. Another feature in an individual plan that's a must-have is COLA, or cost of living. If you ever go on benefit, you want to make sure that the benefit is going up by the cost of living. So that's a key feature to have in there. And finally, The last feature that you need to have in there is something called ROP, or return of premium. And so if you have the return of premium feature, every 7 years like clockwork, you're going to get 50% of your money back. So you do need to do a calculation on this feature versus the cost versus the benefit. But when we usually crunch the numbers, it is in your favor. And so the return of premium feature is very key in terms of how you design your overall policy. This channel allows me to share my passion when it comes to disability insurance and building financial plans. And so I will only produce content that I would like to watch. And so my commitment to you is to always give you 110% in every video that I do. So if you would like to learn more information about disability insurance, or perhaps actually implement a disability insurance policy, click on the link below to apply to become my client. And if you like this video, give it a thumbs up, subscribe to my channel, share a video with a friend, and just remember, when we design financial plans, we design it to make sure that your money outlives you in retirement.